This is Adrian Larson, President of Pathlight, here with your post-Thanksgiving edition of the Pathlight Insight. And I'm thankful for a lot of things this Thanksgiving season. I was able to spend Thanksgiving with some people who are very special to me. I'm thankful that the midterm election cycle is over, but watch out, 2019 starts the presidential cycle in earnest, so get ready for that. But I'm also thankful for strong S&P 500 corporate earnings. So S&P 500 is about 95% done on reporting, and we're seeing earnings growth in the third quarter of 2018 at roughly 28%, revenue growth at 8.5%. So it continues a strong trend, and so we like seeing that type of result from the companies that we invest in. But really what I want to come to you in this edition of the Insight is about investing versus speculating. And we've seen a lot of volatility since the beginning of October enter into the market. And really, if we condense this period into this short term, this beginning of October to the end of November, it feels like we're on a roller coaster and it feels like everything has gone wrong. Really, it started with a speech by the chairman of the Federal Reserve, Jerome Powell, on October 3rd. That speech, which basically stated that the Fed was going to raise interest rates aggressively over the next 5 quarters, caused markets to decline by almost 10% in a very short period of time. But then just yesterday, we had another speech by that same chairman of the Federal Reserve, Jerome Powell, saying that no, the Fed wasn't going to be as aggressive on those interest rate raises, and the market rallied 2.5%. So really, it's this short-term thinking aspect of this speculating. You have to be right on both sides of that trade. You have to be exiting before the decline and then entering right before the upswing. And if you didn't know how to do it, I didn't know how to do it. I wouldn't have positioned people correctly for that trade. And ultimately, we don't want to position people for a singular trade, a binary trade, because we're coming up on another one. The G20 meeting is this weekend. President Xi and President Trump are going to meet to talk about trade discussions with China and this tariff war, this trade war. If you know how that's going to turn out, then position yourself Friday, because you're going to be an amazing Kreskin at that point in time, because nobody knows how that communique is going to go. Is it going to be positive or is it going to be negative? Because if it's a good communique, the markets are going to be higher. If it's a bad communique, the markets are going to be lower. I just don't know how to handicap that. And so we don't want people out there ultimately trying to handicap these binary events that you have no way of knowing. So that's where we come back to the investing side. We want to look at the long term, take that step back and take the longer term approach. Because if you look at the S&P 500, if you started investing 2 years ago, you're up 20%. If you invested 5 years ago, you're up 48%. And if you invested at that March 2009 generational low, you're up roughly 300% going through yesterday. So again, take that step back, take the breath. If you have questions and concerns about where things currently are, touch base with your advisor. Check in on your financial plan. Are your investments aligned with that plan? Are you working toward the goal? If those things aren't aligned, then make sure they get into an alignment. And that's really the message that I want to send to you today. So again, if you're concerned out there, have any questions, and want to touch base on that plan or the investment side, please don't hesitate to give us a call. Take care.